A bullish month of February for the world's #1 safe haven called gold. The latest data from the World Gold Council says the bullion prices surged 9.5%. That's the highest monthly growth in 4 years as investors turn to the precious metal as safe haven amid concerns about the global economy. Gold prices have been on the rise in the first 2 months of 2016, and the renewed volatility in the global stock markets and a slowing global economy. Prices hit $1,263 an ounce on February the 11th, and that's an increase of almost 20% from the low of $1,061 an ounce on the 31st of December 2015. Many international investment banks have revised up their gold price forecast for the year 2016. The Netherlands-based Rabobank, for example, forecasts that the bullion will rise to $1,300 per ounce by the end of this year, up from its previous predictions of $900 per ounce.
There was a strong safe haven buying demand. It whittled down expectations of an interest rate hike by the U.S. Federal Reserve in March and June, and concerns over a possible British exit from the EU, and declines in the global stock markets have helped boosted gold prices.
We're still sticking with the commodities business. Crude oil prices have rebounded over the past few weeks, but the question remains, is this a turnaround or just a blip, or what we call a temporary bounce? It's called a dead cat bounce. VOA Channels TV business correspondent in New York, Jill Malandrino, talks to the president and CEO of Leon's Wealth Management, Sander Reed, for his thoughts on the oil conundrum.
Crude oil has made a stunning comeback over the past couple of weeks, bringing the S&P 500 up with it. Sander Reed of Lions Wealth Management, do you think that there's some basis here for this move? Have fundamentals really improved?
I do. I mean, the nice thing about gold, I keep saying gold, but oil is the fact that it's a commodity product, and it's driven by supply and demand. So obviously there's enough supply to last a long time, and it's created this downward pressure on the prices. Some people are saying $10 a barrel. Some people are saying $65 a barrel. I think we're going to consolidate for a long period of time. I don't think it's going to go much lower or much higher. I think it's just going to go sideways for the near to intermediate term future. Right. So for 2016, we'll be in that $27-ish to about $40 range. Do you think we'd ever see the $50 handle again on crude? Absolutely. Markets crash 3 times faster, the old adage, 3 times faster than they recover. So you're down in an elevator and you're up in an escalator. The last time crude crashed the way it did this time was 2008, 2009, a little before that even. And it took a long time to recover. It's slow, it's methodical. It's not like we're going to wake up tomorrow and have a $55 a barrel crude price, in my opinion. Okay, thank you very much, Sander. Thank you. For Channels TV in New York, I'm Jill Malandrino.
Yeah, that's Jill there for you. But let's come back home a little bit. We head into the long Easter holiday. So ahead of that, intense exchange rate volatility is continuing to affect food prices, coupled with the petrol scarcity. Reports say some of the grocery stores are running low on inventory, and that celebration's fast approaching. In about 3 weeks' time, demand for food prices are bound to rise. Let's talk to a senior investment officer at the financial derivatives company based here in Lagos, Okoyemi Ogutade. Give us an update on what the domestic commodity prices are looking like. Okoyemi, good afternoon, and thanks for joining us.
Good afternoon, Versa.
Okay, we're just about 3 weeks into the month of March. The holidays will be here, and we'll be wrapping up, as it were, the first quarter of the new year. Talk to us where domestic price is heading right now.
Well, domestic prices in the month of February, and so far so good. In the month of March, we haven't seen any significant increase because we just started the month of March. But based on what happened towards the end of February and into March, with the fuel scarcity as well as the dollar scarcity that still remains, it appears that commodity prices might still continue to go higher, coupled with the fact that we are having Easter towards the end of this month, and what we know is during festive seasons the increase in demand for commodities usually increase. But if we go back to 2013, the Easter period during 2013, most traders complained of the fact that there was a slowdown in business activities because most consumers were complaining about lower disposable incomes, and at this moment, we've seen that in this year, there's been a lot of job cuts, and as well as we've seen that the economy isn't exactly as strong as it has been in the past. So it's a possibility that the slowdown in the economy might dampen the effect of an increase in prior consumer resistance. But as the saying goes, people still celebrate even during a funeral. So the demand during the festive season will still remain.
Okay.
It's what we see during Christmas or the Muslim festive seasons.
Yes. So all this, do you think we're looking at some level of inflation rising very gently on the back of the food index?
Yes, we at FTC were projecting that the inflation for February would be 9.8%, but moving into March, it might increase marginally. It might not be as high compared to the January figures. It might increase for the month to month.
Okay. Okay, thank you for your thoughts today. Thanks for bringing that to our notice, and everyone's getting ready for that. They know what to expect. Okoyemi Oguntade, Senior Investment Officer at Lagos-based financial derivatives company via Skype. Okay, let's go back to the bigger story. Turkish President Tayyip Erdogan holding a diplomatic meeting with his Nigerian counterpart, President Muhammadu Buhari, in a bid to bolster trade and security between the two countries. Reports that will include security ties and strategic partnership. Addressing journalists at the presidential villa after the closed-door meeting, which went on for several hours, President Erdogan disclosed that Turkey was ready to help Nigeria in its reform agenda.
Nigeria is facing its worst economic crisis in years, blamed on the downturn in oil, which has lost around 2/3 of its value since mid-2014, triggering a slide in its naira currency. Having relied on oil for 70% of its revenues and 90% of its dollars, the federal government has had to impose budget cuts and foreign exchange controls to protect the naira, which is now trading on the streets more than its official value. Since taking office in May 2015, Nigeria's President Muhammadu Buhari has been on 26 overseas trips, visiting Saudi Arabia and Qatar last week, where officials say he hopes to drum up interest for investors. During his visit to Ghana on Tuesday, March the 1st, President Recep Erdogan said Turkey stands ready to help fight the growing threat of terrorism in West Africa under a new strategic partnership. He says his country is seeking to build on the existing relationship they have with Nigeria.
Let me underline the fact that the steps that we will take jointly with Nigeria into the future have different aspects, including trade, the economy, military, political, in addition to others. Indeed, we have been to the Ivory Coast and gone to Ghana, and now we are in Nigeria, the largest country in Africa. Our relations with Nigeria goes back to old times, especially diplomatic ties. Currently, Turkey has high-level strategic council agreements with 20 countries, and we hope to be able to draw yet another of these with Nigeria in this part of the world. We have a lot of similarities between our two countries in political, military, educational, trade and cultural areas. Our ministers can work jointly, and also presidents can visit countries in Turkey and here in Nigeria. As a result, we will have combined forces, and it will be a win-win basis for both our countries. This is why I did go out of my way to utter the phrase strategic partnership.
For President Muhammadu Buhari, it's important to remain focused on pulling Nigeria out of its present economic crisis.
We will refuse to be demoralized. We will maintain focused in terms of developing our countries, creating jobs for our people, and maintaining security.
President Erdogan is also keen to open up new markets for his country's exporters to seek new investment opportunities in fast-growing African economies and boost Ankara's diplomatic profile on the global stage.
All right, we're starting to Nigeria's FMDQ market. After the break, stick around. You're watching Business Incorporated.